What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 5th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got a jam-packed episode where we're not only going to be talking about Bitcoin's price volatility since we last spoke on Wednesday. I want to talk about my forward-looking outlook going into a potential ETF launch in the next week, plus my thoughts in regards to the halving event later in April. But outside of all of this as well, we got to talk about what may very well be a major flush coming in altcoins in the near term, or at least specifically in dominance terms, meaning we should probably hold off for now on our focus on altcoins, and also our concern around broader global assets being overheated right now. We've got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like. Let's go ahead and kick off the rambling. All right, guys, I want to start here by talking about Bitcoin's price action, because from last Wednesday's video, we had a bit of an odd situation where we put out the video and then literally like a few minutes later, market prices just tanked. All right, it was unfortunate timing for the upload, but we like to try to stick to a routine schedule here. Generally speaking though, what exactly we've been discussing here in this channel played out here. We watched for how price reacts with that 21 day. And while we had a period of time where we went below the 21 day and it was kind of fighting here with that moving average, later we saw here within a day or so that we were coming back up and turning the 21 day into support. There really is no need to overcomplicate it beyond that, guys. We see how price is interacting with the moving average. We see here that so far the bulls are in charge here. There's no way to deny that here as the price trend is continuing to hold up. It's the same formation, almost speaking, over the past month, December, than what we saw back here in November, building up into the early December rally from around 38K towards around 44.5K. So until that 21 day stops acting as support, we should be generally bullish on Bitcoin. Nonetheless, though, I want to emphasize here that as we approach towards our target of around 48 to 52K, I think that that is where we're probably going to get a near-term top. This is leading in, again, as we've discussed for the past few months, since really back in October, early November. Simply put, this is the time period that many people have been anticipating a Bitcoin ETF coming here into early January. And I expect that as we go into it, there can be some optimism, and when the actual ETF launches, you're going to get a lot of mixed volatility. It's not going to be an optimal time to really trade, and what you're going to want to do is simply watch that 21-day moving average, see how it reacts with that range, whether or not you're bullish or bearish on where your expectations are for where to go after the event. And outside of that as well, it's a really interesting time ahead, because we've also got the halving event nearly 90 days away from where we are now, set for April 7th of 2024. So I think that if you haven't picked it up already, I know I certainly have, this rally we've seen in price, whether it's the start of a new bull market, this is where, again, I think the debate can come in between different opinions in the space. I lean more towards the pessimistic side. I think while there's a chance for us to continue up here to 48, 52K, even with the upcoming halving event and the ETF, I know a lot of people are excited about these events, but I would say to be cautious going into this, because while these are optimistic events here for Bitcoin, we need to understand that as Bitcoin's price moves higher here, sell side pressure will generally pick up, right? As you move higher in price, people will start to distribute. You stop having longer term holders. You can see this with every single bull market. You can see it in the on-chain analytics. And this is what establishes tops, essentially. When you have these big events here, whether it's the CME futures launch in 2017 in December, whether it's the Coinbase IPO in 2021, these events, which get people really euphoric, it puts Bitcoin in the headlines towards some of its highest levels in years. Everyone starts feeling the FOMO. They see price potentially rallying into the event. That is usually when you start to see a lot of long-term holders or traders distribute or sell their positions. So I want you guys to heed caution here. I think that it's more likely than not that we do see some kind of pullback, likely down towards the 100-day or 200-day here going into January. And potentially with the halving event, maybe that shifts direction within that 90-day gap window between when the ETF is likely to come and when halving is expected to happen. So again, just keep that in mind here. My general thesis here in the near term is you potentially get a continuation up here. We get a pullback on the launch, coming down here towards some of the moving averages like the 100, 200 day. Of course, these will be higher from where they are now. So just keep that in mind as well. I'm not saying that it needs to collapse down here to 32K or 37K, but I think you are going to get a cool down here in Bitcoin prices eventually. And beyond that as well, I definitely want to spend some time to talk about the altcoins. But I did want to share one thing with you guys real quick. As we go into 2024, in a new year, there's going to be a lot of interesting things that we're going to be focusing on, not just in crypto, but also across the board in macro markets. And I wanted to let you guys know that we're looking to expand the DataDash channel. So if you guys would love to be one of the video creators and creating content here in this channel, we're looking to expand out to new faces and new names, and also hopefully be able to put out more content. You know, I'm a one-man shop right now, guys, when it comes to the content side of things. I'm able to put out about 3 videos a week, and I would love to get to the point where we could get 4, maybe even 5 videos out there covering different types of markets, and also maybe getting some other people out there covering some of this core stuff that we're discussing as well. So if you guys would like to join us, you can check out the form down below in the description where you can learn some more info on that. And don't feel intimidated if you don't have all the equipment or you don't have the best setup or everything. It's totally fine. I understand most people do not do YouTube full time. So if you got a webcam, if you've got a microphone, just give it a shot, and just follow the instructions in the application. We'd love to get some more people, especially those of you who are viewers of the channel who love what we do here as a potential part of the DataDash family. So let's go ahead and continue the conversation here, guys. I want to talk a little bit here about what's going on with altcoins, because while altcoins were really riding high the other day, while Bitcoin was retesting its 21-day, altcoins had a brutal wick, a huge breakdown through the 21-day. To put that in perspective, it went from around a $490 billion market cap down here to 448. So you're talking about easily $40 billion wiped off from the market cap here, coming up nearly $50 billion from where we were before we broke the 200-day. Excuse me, the 21-day. So this was a huge snap here, and I think that it's an indication that we can see just how quickly profit taking can come here when Bitcoin is starting to pull back. And it's a big reason why I believe that as you have the halving event, as you have the ETF coming up, irrespective of whether or not you think asset prices are moving up or down after the ETF, altcoins at this point look quite overextended. They are far away from the longer term moving averages. And look, to be honest, altcoins have been on a great run here. They've come up from around 315 billion to 530 billion. Really nice percentage expansion here for altcoins during this period of time, around 70%, right? This is about the time when you cool down and you pull down towards those smaller moving averages or those longer term moving averages that are at a lower price range. And you get a nice 20% pullback from, say, like $530 billion down here towards the lower $400 billion range. It's a healthy correction, buyers come in, and there can be some continuation in the trend. I don't know if we're going to be really set up for that long-term bull market, but I have to tell you guys here that it's looking more favorable to be long Bitcoin. When I look at the ETH to BTC ratio, this looks abysmal. The response versus what we saw back here in June of 2022 tells me that ETH, this whole pattern here has been a massive distribution from ETH to BTC, right? So slowly but steadily, a lot of whales, large people who bought back here when we were buying back in 2018 and 2019 and 2020, right? We bought Ethereum back when it was a double-digit coin, when Arthur Hayes, who's now one of the big proponents of all the upswing in this market now, was calling it a double-digit, well, shitcoin, sorry for my language, that's what he called it, not me. And we were buying back then, and we rode Ethereum up to thousands of dollars per coin. Now, if you look at the ETH to BTC ratio, it just doesn't look good. There's no accumulation happening. This looks like distribution and a clear acceleration of a downward trend here, getting shot down by the moving averages. Even Sol here, which had a great rally here throughout 2023 and has definitely, in many people's eyes, stolen the show from Ethereum, is looking overextended. It's facing resistance at the same range back here in April 2022, in January 2022, and looks like it's ready to snap that 21-day. We'll wait and see what happens here, but I'm just letting you guys know here, if I had to tell you where I think things are going, this looks pretty overextended to me, and it needs to come down here towards some of these healthier moving averages before it can start to accelerate higher. And that's going to mean between ETH and Solana and all these alternative L1 or L2 plays or altcoins that have gone up, you're likely going to see into the event that we can get a reacceleration here in Bitcoin dominance. Do we come all the way up here towards the descending line of resistance? I don't know about that, but I will say that you've probably got another couple weeks here where we're going to stay above this 200 week, because it's much lower than when we were back in the past here. And yes, over time it's lowering, but I would say there's a good chance here that you at a minimum will come up between somewhere at 55% here towards around 57.5% for Bitcoin dominance. And that's going to mean a lot of altcoins that have made some phenomenal returns are going to continue coughing up some of those gains. A great example of this that we've talked about that we're definitely interested in is Bonk, right? We've emphasized that we're watching Bonk here for some kind of pullback towards the moving averages. We're looking at potentially the 100-day pocket or the 200-day, right? This is, again, a great example here, right, that eventually things are going to cool down, and you got to be patient and wait until you get a nice capitulation candle into those moving averages. You see it holding there, you see conviction in price at those levels, and that gives you the foundation where you can have a really great risk reward setup to go long some of these. Our focus is definitely altcoins. I don't want you guys to misinterpret that. I do believe altcoins are going to be where the gains are made. It doesn't mean that you can just buy them whenever, though. You have to wait for prominent entries. So as we get a nice pullback there, 66%, 70%, 80% pullback into this kind of core levels that buyers usually look for into these moving averages, I'm going to see how price is reacting at those levels. And from there, we might be able to have some really great entrant opportunities, or at least have great risk reward setups, not long-term positions, but nice short-term trades where we could get in real quick, double our money, triple our money, quadruple our money, whatever percentage you're expecting, and get out quick. That's the key goal here. Right? Now, I want to go ahead and step out of the crypto world because while altcoins are in their own little world sometimes, we do need to step back into the macro because the macro does matter for Bitcoin. And I know it might sound crazy, but it does matter here, I think, for the risk on or risk off narrative that's going to take hold for altcoins as well in the longer term trend. The reason I say this here is we've got some warning signs across the board in equities that at a minimum show that we are due for the typical healthy 15-20% correction. Not even saying that it has to be a bear market recession, but I got to be honest, that's where I lean towards if you're asking for my candid opinion. And I'll explain that as we go through the conversation. First off, just in the near term, let's just talk first and foremost whether you're bullish long-term or bearish long-term about the short-term price action. Right now, things are heavily overbought here, guys. You can see on the XLF ETF, this is the financial sector, that we are right back up towards the slightly ascending resistance band here for the ascending channel that's been in play since back in 2022. So for over a year and a half now, since back in May of 2022, we've been in this channel, slightly higher lows, slightly higher highs, no real conviction of trend. However, we are getting back up here towards the heightened portion again, where generally speaking, within that period of time, you are expecting a pretty sharp correction in these financial stocks. You could see a 17% pullback here. You could see a 13.5% here. And in August to October, around a 17% pullback here. So this again looks very overextended to me personally, but it's not just the financial stocks here. It doesn't even matter if you guys are looking to trade these stocks. I'm just trying to take a look across the board to let you know that this is probably indicative of the broader trend of financial stocks and equities as a whole. Take a look here at XLE. This is the ETF for the energy sector. We're looking back here on the monthly chart. Since back in 2008, there are not many periods of time where energy stocks are at this range. If you just kind of draw a line from where we're at now, we've had a lot of time below this price range. We don't have much time above this price range. And this is again why if you just take a look at the long-term time frames, right, it lets you know, hey, is the market still really cheap here, really a good deal? Is the soft landing, all these narratives that people are really just about, is that really what I should be listening to? Or should I perhaps be exercising a bit of caution here? Because there's a lot of history here where energy stocks are much cheaper. Odds are here that prices are moving lower, that at a minimum they need to come down to those long-term moving averages like the 200-week, and that alone from where we are right now is a steady correction of around 15 to 25%. Trillions of dollars of value set to likely be wiped out at a minimum. Take a look at XLV. This is the healthcare sector here. Long-term distribution pattern, in my opinion. No serious trend here since 2021, since the pandemic. You can see that healthcare stocks got really extended from their 200-week. And while we did get a bounce back here in October, The question is, can we really clear through this resistance, which got shot down not once, not twice, but 3 times already? I don't know if the 4th time is going to be a charm here, guys. Healthcare stocks have had a nice rally here since October, but it's not enough here to showcase conviction to really break out of this range. This to me looks like typical distribution, and I think we need a nice dip, as we've seen throughout history, a dip below the 200-week, significantly below the 200-week before healthcare stocks can really be a buy at these levels. XLK, technology ETF here. Snap below the 21-day, not a good look after having multiple green weeks here, consistently green all the way since back in late October. And now we get a major gap down at the open and a week where we're down 4.3%. When we get these kind of moves, these upper single digit downward weekly moves, that's usually an indicative sign, especially when you've trended this high, right? We saw it back here in January 2022. You see it here in April 2022. You can see it here as well in August, during this period of time when the Fed had really signaled that it's continuing at Jackson Hole to maintain strong monetary policy. You saw it here in July. At a minimum, we're likely coming down to that 200-day. We're coming in for a cool down, right? And again, this also leads to the bigger question here. Are we coming down to the 200-week here, potentially, in a potential recession? I think that that's a reasonable price target. I think at a minimum, we should expect something like that. Maybe even a little bit worse, like a real collapse below that 200-week, maybe a double bottom at this range at 114. Technology, guys, as much as I'm really optimistic about AI, we got to understand here that these prices that we're seeing in the market, the value of technology equities are not just all around AI. AI is one narrative of tech. You also have all of the traditional businesses, e-commerce, social media, cloud infrastructure, everything you can think of that Amazon, Microsoft, Apple, Google, Meta, all the big technology plays, even NVIDIA as well, right? That they service. And if we go into an earnings recession where people start paying lower PE multiples for these companies, or those big tech plays like Apple that really aren't AI plays at the end of the day, have shown no real effective moves into AI. Tesla as well. These companies are Tesla in this case, I know it's mainly an automobile company. Yes, they have their plays in AI, but XAI, all these entities, SpaceX, that people always talk about, they're separate from Tesla. They're separate companies. So anyways, just want to emphasize that. Some people have some confusion about that. They think I'm attacking Tesla. But Tesla, at the end of the day, is an automobile company. And sure, there's self-driving. Sure, there's all these potential what-ifs. But that doesn't mean that into a recession, you can value those companies off of those hopes and dreams. They may come one day, but these technology companies right now are going to look more and more towards their fundamental businesses. Investors are going to start pricing them accordingly. They're no longer going to be paying 30, 40 PE multiples, 30 to 40 years of priced in earnings for current valuations. It's just too much. Semiconductors as well, right? Similar scenario here. What looks like very much like a deviation. We snap below the 21-day. If this gets below the 100-day, especially the 200-day, you're likely coming down here to the 200-week. And that's rising over time. So we could just be calling for this to come back to where semiconductor stocks were back in May of 2023. NVIDIA is riding high because it's the GPU manufacturer, but this also includes CPU manufacturers and a whole range of other technology companies that really shouldn't probably have rallied as much as they have, if they're not going to be benefiting directly from AI like NVIDIA is. Therefore, you could easily get this coming down. You could still be bullish on AI and get a great entrant, probably down here at 125, which from where we're at right now, or from the relative highs, it's going to be about, well, what do you know, almost like a 30% pullback. That's what you'd want to see. That's at least what I want to see here in the market. As someone who's traded for a long period of time, that's the kind of discount opportunities that I would come to expect. And we can see here as well VTI, right? An inability to continue following through. If we're really kicking off a new bull market, this is the time where you just squeeze through. You squeeze all the shorts, you break through to new all-time highs, and you confirm it. But we didn't get that. We faded here. Below the 21-day, And as you can see, time and time again, when you get a curvature on that 21 day, that's usually your sign that things are heading lower. So keep that in mind here when you guys are doing your analysis, when you guys are trying to determine the direction of where, altcoins are going long term, where crypto as a whole is going, because we do see a strong correlation here with the performance of Bitcoin and altcoins with the broader move in asset prices. That correlation has just grown stronger and stronger here, guys. And when you consider how overbought we are in accordance to history against the money supply, when you consider whether that's for the S&P 500 or for the NASDAQ, you have to ask whether or not you're buying in to euphoria or a solid discount, as everyone's telling you it is. I tend to believe in this case that history is showing us that we're overbought here at these prices. Even if you like the narratives of AI, even if you like the narratives of what might be coming in the future, there's a lot to look forward to, guys. I'm an optimistic person. I'm a pragmatic optimist. I do believe the number goes up and to the right. I do believe in a positive future. I'm not here to say Armageddon is coming, that the world is just going to be terrible. The world generally gets better over every year, every decade when it comes towards the standard of living. But at the same time, that doesn't mean that every day is a great day to buy. You got to set some standards. And one thing that I just want to echo here, the amount of people saying that the soft landing is here, that we're not going to have a recession of some sort. The only thing I'll tell you here is watch the yield curve. That is the US 10-year yield minus the 2-year yield. You can plug it into TradingView. You can watch it and look over the history here over the last 40 plus years. Watch what happens with that yield curve. If we keep moving up here, you will see equities decline, and you will likely see crypto decline as well. It's great to do technical analysis on Bitcoin. We do that here in this channel. We watch the moving averages. We try to follow and lead into the trend. It's great to trade altcoins. There can be a week or two where you can make so much good money in that period of time by just landing a few trades that you're good for the trading year and you don't have to do anything else. And you will have outpaced the overwhelming majority of investors and traders. I'm not opposed to doing those things, guys, but I also am going to let you know that if you ignore these factors here, you could be caught holding an empty bag because you got caught in the short-term FOMO. The fear of missing out. The excitement in the market. And now with us finding support on the 200-day pocket, the 100-day pocket, and the 21-day here for the yield curve, and we're continuing to uninvert here up to the upside, that spells bad news for where equities are going in the coming year. We saw this in 2006, we saw this in 2000, and we saw this back here in 1989 as well. Be cautious, guys. Maintain a healthy degree of skepticism into all the euphoric narratives that are being preached to you. Because if you don't manage your money yourself, the market will manage it for you. That was a quote from one of the co-founders of Three Arrows Capital, who went on to get heavily invested in Terra Luna. And it's such a true quote, but it's a bit ironic how that's the person who was preaching it. And yeah, they're probably off in Singapore or some jurisdiction, even though they lost billions of dollars for their investors. Anyways, my point here is that they learned their lesson personally by going all in on crypto assets at the peak in May of 2021 and November 2021. So my point here, guys, is that you've got to be able to think about managing risk first. You've got to put that first at every single turn. And I could sit here and promote some leverage trading link and tell you guys you got to go trade on leverage 24/7, trade every single move. But I'd rather be a bit more level-headed and let you guys know that, it's been a great year. 2023 was a killer year. You know, if you nailed some right altcoin plays and you went against the grain there, that's great. Doesn't mean it's going to happen in 2024. A lot of the exciting things that people are looking forward to, the halving event, Bitcoin ETF, I think a lot of that anticipation is baked in to a large extent. So anyways, guys, one thing I want to let you guys know about is if you are looking to build positions in crypto, I think one of the biggest things you should keep in mind is tax strategy. Now, I'm not a CPA, I'm not any kind of tax accountant by any means, I don't want to claim to be, but I want to let you guys know that if you are looking at the end of the day to mitigate your tax obligations, I don't need to be a CPA or any type of tax expert to tell you that if you are looking to cut down on your tax obligation, whether you are trading, whether you're long-term investing, you definitely need to consider looking into an individual retirement account if you're in the United States, an IRA. An IRA is a tax vehicle that allows you to be able to put in monthly contributions and essentially trade or invest in financial assets with the tax advantage of not having to pay taxes on it annually. You only will have to pay taxes on your funds, if I understand it correctly, when you go into retirement age, where you can unload the account or basically unlock the account, and you pay taxes on the total balance from your income bracket. And by that time, if you're retired and you're not making any money, then your income bracket is lower. That's the concept for an IRA, roughly speaking. So if you guys are interested, I highly recommend you understand the logistics of an IRA. It's relatively streamlined once you get it all set up. But from there, you can utilize our sponsor and partner, iTrust Capital. We have a link down below in the description. They'll give you $100 when you sign up for an account and get everything set up. But generally speaking, iTrust Capital allows you to invest in a whole range of crypto assets as well as trade a wide range of crypto assets. And they're ranked as the #1 crypto IRA platform with $7.8 billion in transactions, over 200,000 accounts. They have a whole range of cryptocurrencies. They may not have every single altcoin we talk about here in this channel, but they've got a lot of the established ones out there. So if you've been long Solana and a lot of the alternative L1s, if you want to buy meme coins like Dogecoin, they have those as well. And they also have the more defensive ones, of course, like Bitcoin and Ethereum. So if you want to start parking some capital away for retirement and take advantage of those tax advantages of an IRA, then definitely consider signing up for iTrust Capital at the link down below in the description. Again, you get $100 if you sign up for it. If you don't like it, again, just something you can give a try and stuff. There's no onboarding cost to setting up the IRA itself. So anyways, guys, that's it for today's video. Thank you all so much for watching. If you happen to enjoy the video, consider dropping a like. I hope you guys have a phenomenal weekend, and I hope that above all, this video proved valuable for you all. Have a great weekend, stay safe, trade smart, and I'll see you guys back here on the channel on Monday at 6 a.m. Eastern Standard Time. Thanks so much, everyone. I'll see you all later.